Right now we have our superstar guest, Ben Kingsley, one of the big names of... Oh, I can't. I'm not going to settle down all day. Ben, welcome to the desk.
Thank you.
Tell us a bit about your main theme running through today is obviously buy, sell, hold. Yep. What's the best thing to do in this market, which is clearly fluctuating in the major capitals? Yep. What's the main advice that you're giving to people today?
Yeah, so it all comes down to the asset selection. So if we've made a good selection, we want to play the long game. So if the asset, look, there's times in the market where we do see a correction that's coming through, but if we've got a good, solid asset that's got strong owner-occupier appeal, then we just take a big, deep breath and then we say to ourselves, we're playing the long game, because those assets, when the market does move again, tend to do really, really well. Now, if you've bought an asset that might be oversupplied, such as your unit off the plan or something like that, you're probably going to have some challenges. So that would be the exception to the rule. They're the ones that you might be sitting back and saying, well, how long do I wait? Like we've seen properties from, past booms that are still selling for roughly the same price that people bought them in 2003, 2007. So they're the types of properties where you've got to say opportunity cost, do I need to move on?
We actually had a property last week in an auction that released a figure, remember, and it went for, I think it was $70,000 less than it was purchased for about 18 months earlier. So what advice are you giving to these people then? I mean, it's obviously by individual, assessment.
Yeah, it is, and that's the whole sort of conundrum is sell or hold. So the analysis that you would do is, we're getting a little bit technical, but it's a rollover cost. So it's basically assuming what it would cost to basically sell out of that property and go into a new property. And how do we do that? You analyse the demand and supply in that particular area. So if you're seeing a lot more supply coming on, there's very little chance that that property is going to move up in value for maybe 3-5 years. So if then you're sitting back and saying, well, this is affecting my overall investment strategy, then ultimately I might have to divest from that asset and then go and pick a better one in an area and a location where there's pent-up demand and more chances for capital growth.
What are those areas and locations that you're directing people to? Where is the pent-up demand?
So the big question, where are we buying? Yes. So in our buyers advocacy business, we're buying at the moment in southeast Queensland. We're buying houses in Brisbane and Annerley. We might even be at that auction. We're also buying very close to the water. Houses in Brisbane and some of the really better yielding properties really close in, like 500 metres to 1,000 metres from the beach in southeast Queensland. So that's Sunshine Coast and also Gold Coast. We're buying houses in Adelaide. We do like some of the more sort of period bungalows in Adelaide. We think they're still attractive.
Beautiful character.
Yeah, nice character. We really focus in on those character homes. We think that that's the owner-occupier appeal, because ultimately the investor should be taking the lead from the owner-occupier. They buy with their hearts, not their heads. So if we're a price taker in the market, those owner-occupiers are going to push that value higher, and we're going to get in behind that and basically push that area up.
Do you see, we're seeing on the show a lot recently this push towards regional areas, particularly in Victoria, where the regional suburbs are quite strong with beautiful buildings. Do you see that as well happening?
Yeah, look, we're buying in Geelong, we're buying in Ballarat. We've had a look in Bendigo, so they are definitely some markets. We were buying earlier in the year in Newcastle. We've moved on from that market. We feel like the equilibrium's come back into the supply and demand in that market. So yes, they are definitely attractive, because you're also starting to see new technology and new transportation. So for Geelong, it's going to be a 45-minute, train trip from Geelong up to Melbourne, so people can commute for work, and then also have, the beautiful Great Ocean Road and the beaches down Geelong Way. So we're definitely being, buying down there, and that's been performing really well.
And can I just take it back a step and you say we're buying? Like, who's we, and what are you doing with these properties?
Okay, so our business is Empower Wealth. We're a wealth advisory firm, and we specialise in residential property. So what we do is we sit down and plan with our clients the most appropriate price point for them to buy, and we look at what they can afford from a yield and growth point of view. So obviously the income keeps you in the game, the growth is effectively what creates your wealth. So from our point of view, we sit down, do a strategy, and then that'll tell us exactly the price point that we're going in for that particular client, so case by case, and then we find the best location based on our demand and supply assessments. We score it out of 100. We're analysing 17 variables, and we basically score every suburb for units and houses across Australia.
Do you see, Ben, I mean, you mentioned that you could have very well somebody at that auction right now.
Yep.
That's a house. Do you see a nudge towards houses rather than apartments because there are excess, or what's your take on that?
Yeah, look, ultimately it's land that appreciates, and it's land that's in shortage. So if you were to do a tick box, it goes houses first, then townhouses second, then small flats or villas, and then down to apartments. So, you know, to get into an apartment building for us, it may be a yield strategy where it might be really close to the beach. Sure. So it still has some scarcity, may have uninterrupted views that can't be built out. So that gives it an X factor. But fundamentally, when we look at every city across Australia, we are starting with what the buyer wants to buy from an owner-occupier point of view, and we work back from that based on that demand and supply.
And can you tell us a bit about what you'll be doing today? You'll be up on the main stage having a chat at some point, won't you?
Yeah, we're talking first home buyers today. So we've got a really large workshop. We're going for an hour and a half. So there's 4 of us who are going to be talking about the different stages and effectively lining your ducks up. So the first, I'm talking about lending. I'm a mortgage broker as well. So I'll be talking about, you know, what are the things you need to look at. So understanding cash flow, and then how you put together your application, and what are the things lenders are looking for. So loan to value ratios, you know, minimum deposits, what sort of savings plan have you got? Because one of the big things for first home buyers, affordability is coming back into the market, and we've definitely seen them re-enter and most investors leaving the market. So for them, it's definitely a great opportunity to start to explore buying into the market. So if they've saved their deposit, now's the time to, you know, basically be looking around.
There is a silver lining on those clouds for some people. Those first-time buyers look like it. Thanks so much for joining us. You can wave behind during the day. We'll be here all day as well.
Will do.
And for all of you at home, you can come down and see Ben and the panel live. So you can come and join us here at the Property Buyers Expo. Thank you so much for joining us.
James.